I want to talk three issues. I'm going to bring them up, and I want you to give me your viewpoint. Dollar funding, even the Swiss were auctioning dollars. Everybody needs dollars, and it is soaring. Second issue, credit spreads in Europe are widening against spoons, whether you look at the French 10-year or the Italian 10-year, and this is something to pay attention to. And the third issue, of course, is that we want to help people. I get that. But moving to my market guy hat, you said in your note, market monetary theory, we're watching it. Cut taxes, don't even think about anything with regard to deficits. We want to help people, but we do need to remember, in the last crisis, sometimes the hurry to write checks isn't the best way to proceed. Weigh in on all three, Vincent.
Okay, so the first two really are pretty related, which is when you are the safe haven, capital goes to you. In the world at large, the U.S. is the safe haven asset, even though we are now getting the real brunt of the coronavirus infection, or we're seeing our currency appreciate because it's still the place to go. Germany is seeing the same thing, that within the European continent, Germany has many more resources to address problems. By the way, that leads to your third point, which is if you squander those resources, you may no longer wind up being the safe haven. That's the longer-term risk associated with all this. Look, we got to help people. We have to, make as many possible efforts. But, we're not a command and control economy like China. We just can't shut things down. And we really do have to consider alternative means of dealing with this problem.
Vincent, I have so many friends that are still in the commission-driven business, in all financing and trading businesses. And I had one, and he's small. He told me, listen, I have a couple $100,000 a month in my employment nut that I have to pay out my employees. He said, and I'm small, and there's a zillion of us all over. He said the government isn't going to be able to take on all of this. Having full closures and watching these businesses go, I'm not saying I have the answer, but this is a really difficult issue.
It's extremely hard, Rick. 46% of American workers are at firms under 300 employees. That probably means they don't have resources, even if on the high end of that scale. And a good chunk of those people are actually single-person entrepreneurs. We're all proud of ourselves talking about the rise of the gig economy. Well, what happens to those gig workers when people aren't going into Ubers and Lyfts and aren't going to restaurants? That's a real hardship. And what you're going to see is not just employment go down. You're going to see business formations disappear, and you're going to see lots of bankruptcies. The longer we do this, the bigger the toll.
Now, listen, we're just about out of time, Vincent, and I want to pick your brain. My final question to you is this. When it comes to the dollar and the Fed and everything they've done, it doesn't seem to have made a difference. So I guess the point is, trying to do everything to make a difference now, we have no idea if the things we're implementing today will actually work better once this kind of nervous phase disappears a little bit. Your final thought.
So if it is a nervous phase and it disappears, then the Fed is going to be mispositioned. They have put in place policies that ease accommodation that's going to be hard to unwind, particularly in an election year. So that's what happens when you have L-shaped policy meeting a V-shaped economy.
And just to make sure everybody understands, I'm not saying the nervous phase is because we're not looking at this disease in an appropriate fashion. I'm talking about maybe the market's trying to overcompensate because they don't know how to price in such an event.